Hi everybody, welcome to another update on the stock screener. I got a request to look at Steppe Gold, Equinox Gold and Aris Mining. So that's what we are going to do, and we're of course going to compare it to Soma Gold. Steppe Gold. This has gone down 30%, so not sure what's going on here. But let's take a look. So Steppe Gold. I know they had 150 million in debt project financing. So that could be the issue. So as you can see here, enterprise value should be 89 US dollars currently. But with that 150 million debt financing, it should change a bit. Not sure about the details, but let's just add 150 million in debt to our NPV. So that means that here we need to add 150 debt, of course. So the enterprise value goes up. Yeah. We still know that it costs 128 million capex, right, to build it. So that underground has 128 million capex, so that's added here. I added some drilling and growth capex to each year. So 10 million is the typical interest. Now we added 150 million in debt. I assume that this is going to add some more interest payments. Not sure how much, but probably 30 million here, 25 here, and then they will pay it off to zero, right? So this is the production, 30,000 going to 100,000, 800 AISC going to 850. So here is our NPV calculation. Let's add as well the enterprise value so we can do a comparison. So that was 239 million. And then we add it to this chart. Select data, add series name this. Series values are this. Okay. Change chart type to line, and we have our enterprise value. Okay, so is this a good project or not? This is not a good project. No. So how many years is this? So they think that they have what's the mine life? Mine life is 10 years. Okay. From the transition onwards, we have 10 years. Actually, 1, 2, 3, 4. Yeah, 10 years. So from here on out, 10 years. Yeah, should add 2 more years to that, but okay. Actually, they think that they can build it in by next year. That's impossible. I don't believe they can do that. So that's why I took 2026. Probably maybe 2025 is possible. But anyway, you can see already that this is not a good project. So what was the NPV? The NPV was 350 at 5 discount rates. And I get 216 at 10% discount rate. Okay. So it should be correct. And as you can see, you won't get your money back in even in 10 years at very good gold prices. So yeah, I wouldn't buy Steppe Gold. The problem here is that it costs so much money, right? It costs 128 million in capex to build it, and you need to pay it back 2 years, and then you still have upside. But of course, the enterprise value is already 200 million. Yeah, here 200 million because of all the debt that is added. So all that debt needs to be paid back before you can pay dividends and buybacks. So yeah, isn't looking good. The next one, and that's why this is never going to rise that much. Equinox Gold. I used to think that this was a good one, but I will tell you why it's not. So this is Equinox Gold. Valuation is actually higher than the market cap, but here we have another problem. So here the problem is the high capex. Let's add the enterprise value here as well. Which is 2 billion. Okay. So mine life 14 years. Okay, so you can just add some of these years to it. 1, 2, 3, 4, 5, 6, 7. So add another 7 years to this. So that would probably go to here. But that's it. So the production is going to go from 570 currently with very high AIC. So they don't have good projects. It's a very high cost. So they only have this greenstone project that they own 60% of, which has a good AIC of 850. That brings the AIC to 1,400. Production goes up. Okay. and then for 14 years. Problem is, look at this, capex. It's always capex. That's the problem. And the capex is 250. Yeah, one total capex is 1.2 billion. 1.2 billion. And I took 583, probably because it's 60%, I think, that they need to pay. So basically, you have a lot of costs, and payback time is only is 5 years, so not a good project. So based on this, it's not viable. Let's see what happens when gold goes to 2,400. Is it any better than? Yes. If we add another 7 years to this, then maybe you get your money back. But I'm not excited about this project either. That's because the enterprise value is already 2 billion. That's very high. And the earnings that come in are around 200 million, maybe 300 million. So that's a PE of 10, PE of 8. I mean, it's nothing special. Okay. So Equinox Gold, probably it will just follow the gold price. Other than that, I don't see any upside from a valuation perspective. Only from a gold price perspective. Aris Mining, the last one, has done very poorly, gone down because of cost overhangs, bad projects that they bought, like Tolopadu, high debt. They have like 360 million in debt. A lot of warrants, dilution. Marmato that's delayed. So all bad news. So that's why this stock price has not done that well. Let's look at the valuations. First, we take a look at the valuation from EBITDA perspective. Well, gold price is around 1950, yes. So there is a bit of upside, maybe 20-30%. PE ratio around 7-8 currently for Segovia, so fair value. But then we have the Marmato project and the Toroparu, and of course also Soto Norte, which I didn't add yet. So there's plenty of projects that can come online with this one. So it's not bad. However, this is the situation. We have 1 billion in enterprise value. That's this market cap line. We start at 220,000 production. We add Marmato to that. So we go to 400,000. All-in costs are pretty good, 1,100. And then I added Soto Norte to this. And that's it. They should also add Toroparu at some point, but I hear that it's not that good of a project. but okay, that's additional upside possible. Now look at the capex. There is 240 million in capex that's coming in total. So they need to finance that somehow. They do have the cash. Yeah. Also, written streaming cash. Not sure if they need to finance some more, probably, if they get capex overhangs. So in the next few years, the cash flow will be negative, maybe. There could be negative cash flow. So take into account that there could be some more private placements if they have overhangs. So in the coming 4 years, I don't see a lot of upsides from a cash flow perspective because they need to use all of their money to build that mine, the Marmato mine. That's the risk. There is the risk, of course, that the ore body is not as expected and that the all-in cost is much higher than the 1,100. And then we have a problem because they have a lot of debt, 360 million in debt. If their Marmato mine doesn't work as expected, then how are they going to pay off that debt? So that's the risk. Okay, if it's doing as it should, then there is of course net income, and the net income should be around 250 to 300 million per year. That's good. That's a PE of around 3 or less. So if they are successful in bringing that mine online, then this could easily double. That's doable. But they need to pay off quite a lot of debt in the first years. And they are probably also going to put that money back into the ground with Soto Norte. And I hear that Soto Norte has a lot of capex. Capex is around, you have it here, 300 million times 2. I have put it on 2 years, so 600 million. That's half of it because they own half of it, and then total costs will be around above 1 billion. So that's a pretty big project, Soto Norte, and yeah, it will reduce the cash flows again, 2028 and 9. So here we go down again, and then we can go back up. So if they keep building these projects I'm talking about, so this is the first build, the first Marmato mine, and then they built up another mine on top of that, Soto Norte, 50%. So they keep on building new mines, and that costs a lot of money. So you will never get your money back until maybe 2030. And from then on, there is upside, a lot of upside. Because yeah, this mine is going to produce until 2036, 14, 15 years. And then they have Toroparu, which is another 24 years. So this mine has a lot of mine life. So they could easily keep on growing and growing in the future. But yeah, the first few years are difficult. Those are years where there is a lot of capex involved. So I'm not that interested yet. Maybe in 5 years from now. At least I want to see them be successful in Marmato first. If that goes well, then I might get interested. But currently, they have too much debt, too much risk. These new mines can have lower grades, issues, higher capex. You have seen things like pure gold. It was a new ore body and costs went through the roof. 2,000 all-in costs. So everything can happen here. We're not sure about this. And yeah, companies with high debt can be a problem if the ore body is not that great. So all three of these are new projects. Steppe Gold is a new project, Equinox is a new project, and Aris Mining is a new project. All of them can fail. That's the thing to consider here. They can all go to zero. This one can go to zero if it fails in building the underground. They had some problems also with the open pit even. So if they fail with the underground, then this can go to zero. Equinox Gold has a very high cost mines. If their new project is not successful, then this mine can also go much lower, especially with those high cost mines at 1700 all-in cost. Aris Mining, very high debt. If Marmato is unsuccessful, I don't think they can easily pay off that debt anymore. 360 million debt. So, yep, lots of risk. However, there is another mine which is completely de-risked, and that's Soma Gold. And of course, I like this one much more than the other three because this mine is already in production. They already have the 39,000 production run rate, and we are now going to the 50,000 run rate by Q4. They just need to bring the El Limon mill online, and then we can get the all-in cost below 1,000. Gold price will go above 2,000, and you will get your money back in just 2 years. They will pay it off in 2 years, and more growth will come as they find new resources. They expect to add 200,000 ounces per year, and they only mine 50,000 per year. So I expect them to add ounces instead of depleting ounces. So easily they can get this to a 10-year mine life, easily. So this could just keep on rising, and you can see how cheap this is. The enterprise value is only at 70 million CAD, and the value goes above that with a 10% discount rate. All of these mines have an enterprise value above those values. So above these cash flows. So the only mine that's undervalued is Soma Gold. And that's where I put my money. And I'll see you in the next video.